Hi. I just wanted to go over a little bit about how the screening has changed. And what we have here on the screen right now is the Thinkorswim software. That's also changed a little bit too, and you can do it yourself if you want. You can go to a 4-screen grid, which will link all these screens together. You can link and unlink them. When you do this, and you put any symbol in here that you want, it changes in all of them if they're linked. Another thing you can do is you can change the style. This is a weekly style, this is a daily style, like this is a 1-year daily. This is the 1-year weekly, which is where we started out. And instead now we're at 4. This is another 1-year daily with a different style altogether. These styles are bar charts. I don't know. I don't like them. I have my own style. And you know, that's one of them there. But anyway, in the symbols, I've saved some. You know, you can save your grid as. This was the migration from the old. I used to do a 5-minute daily chart, and this is the migration from that. Up in the upper left corner, we have a 1-year weekly, a 3-month daily, a 1-day 5-minute, and a 1-year daily. Now this one here shows it's very. Instead, change the grids to show more information and less information. Up on the upper left corner, we have a 1-year daily charts. These are all daily charts. And then a 9-month daily chart on upper right. Lower left is a 6-month daily chart. And lower right is a 3-month daily chart. Now, the difference between all of these is the 9-month and the 6-month charts have just one channel. It's a visual representation. On the 1-year daily chart, you have all the channels represented. The 1-year channel, the 9-month channel, the 6-month channel, the 3-month channel, the 1-month channel, and the 9-day channel as well. You can do this for any stock, like I said. Here's Apple, for instance, and that actually shows that, you know, we're in a 1-month downtrend. Here's a little prognostication for you. A 1-month downtrend, but the 9-day is turning up from that. In other words, if it was going down, you'd see something like this. This is a 9-day trend turning down from a downtrend of 1 month, which is in itself turning down from a downtrend of 3 months. You know, if it goes beyond 3 months, you probably want to get out of that and take your losses. But anyway, that's neither here nor there. I wanted to show you how I was screening. And what I've done is, in the past, I had used Dividend.com to do the screening, but they don't do any kind of stock quality screening. You know, if you wanted something that was performing well over time periods, they can't do that. They have a rating system. You know, if you want to follow their rating system, you know, be my guest. It's a great site, but I don't use it for screening anymore. Then I started using the bar chart screener, and it allowed a bit more Like you could put in more information to screen for, and you would get results. The problem is that I started to get different results from the same screen within like 2 or 3 minutes of each other when the market was closed. This should not happen. And I contacted them about it, but there was nothing. Another site that I've always liked for screening and just any kind of starting point is finviz.com, and you can put in any ticker you want there, any ticker at all. And this little timeline of what's going on, and even insider trading. I mean, everything you could want to know about a stock practically is right here, and it's at a glance. Excuse me. But what I like on FinViz is the screener. You can go and you could screen for a whole bunch of different things. They have 6,685 stocks here. You can narrow it down by country. We just want the U.S. We can go and narrow the results. We don't want funds. We just want stocks. We come up with a little under 4,000 of those. You can sort by sector, etc. What I like to do is I like to pick something like this, performance, and we're going to go with year 500%, and it gives us 5 stocks that have been up in the year. I also like stocks that are above their moving averages. That moved us from 5 to 3. I like the price to be above that. It's just a personal preference, but it's what I like. And it seems to work, fairly well. When you take these out, the number of stocks increases, but perhaps the quality of those stocks goes down a bit. Perhaps. I don't know. It's just what I do and the way I like to do it. And then, if you're looking for just performance, you could go for 500% for the year or what have you. Let's start with something a little bit more reasonable and go with 100%, because we're going to talk about dividend stocks. This gives us 200 stocks that have made 100% plus in a year. Let's go to a dividend yield. We'll start out very high dividend yield. Okay, and that's 10% or more. And I used to do that. I used to screen for that. The problem is that the number of stocks that are returned, while some of them are very volatile, try and cut down on it with the moving averages. I'll show you in a bit. I settled on, just recently, an 8% yield. So 8% is the minimum yield, and performance for the year at 100%. I've said before I like the price to be above the moving averages, the 20, the 50, and the 200-day. That's the choices you get here. And it doesn't narrow down the number of stocks. So as you can see, just glancing at the quick charts here, they are on an uptrend. Now I'm not going to put any change or pattern, channel up, because that would further restrict the stocks. I like to visually scan these things, and I'll show you how to do that too. So right now we got 100% performance over 8% yield. So it gives us 2 stocks to choose from. If we go and we look for 50% performance and an 8% or greater yield, we get much more stocks. 8 stocks here and 2 before. If we look for 30%, we now have 12 to choose from. And if we look at 20%, we have 18 stocks to choose from. And if we want to go for 10%, we have now 23 stocks to choose from. Since I just changed from the old bar chart screening method, it's going to take me a while to update the spreadsheet, the watch list spreadsheet. But before, I used to be able to plug in whatever I wanted for some of the fields. And while the results from bar chart were acceptable, they weren't consistent enough for me. I mean, any variation at all in the screening results means that the screener is ineffective or worse. So I just happened upon a value of 33% return, and when I screened for that, I was able to get a manageable number of stocks. It's today's list. I don't know if I believe all of it, but 8% yield, 33% return, which is what it says, or it used to say, on my blog page and in my Twitter account. But anyway, what I wanted to show you was how I'm now going to screen for these stocks. And I do have some presets. One that I did want to show you, because I don't know, I'm kind of fond of the name. That happens to be my name. So, and it's a stock that's had 500% or more performance for the year. Price is above the 3 moving averages. Return on assets, equity, and investment is all positive. And here we have a little screen that shows the chart. Nice gap. Some really nice up candle days. And the year's performance is actually 1,117.79%. And the half year is 124%. So you can see there was a bit of a jump. And it's a nice sort of tight channel. The beauty of this Thinkorswim software is you can see the channels and how they respond within each other. I made each successive channel smaller than the one preceding it, so that what you can see is the 1-year channel, 9-month channel, 3-month channel, 6-month channel, 3-month channel, the 1-month channel here, and the 9-day channel. So as you can see, Patrick Industries is turning up in the short-term, near-term trends here. It did start to roll over in about 6 months, so it did level out almost a little bit of consolidation, but lately it's been on a tear. There's others too, so there's different ways you can look at these things. Everybody has their own chart to go for. But anyway, I wanted to show you my new screening. I have these presets, and I look for, let's go with 30. 30% yearly performance, 8% dividend yield, up in the latest quarter, above all the moving averages, stocks only, and for the U.S. That gives us 12. If I went with any and any, it goes from 12 to 20. And I don't really want to involve myself with ETFs, because some of the ETFs, I don't know, they get reported in it's the way that the I don't know what I'm trying to say here. The way that the graph looks, it looks upside down. I prefer just stocks and just US. Some of them are still foreign, but it's on the US exchanges. So anyway, we have 12 at 30% performance and 8% or more dividend yield. And you want any information about any of these, you can just click the line and it shows you. That's a nice tight chart, isn't it? Analyst actions here. If you hold any weight in that, I don't. I find, let's say 20. Doesn't list the insider trends here. But anyway, you have a little bit of an idea of how I'm going to be screening for these in the future. For 10% performance and over 8% yield, I get 23 stocks, and this is on a down day, so I expect this to go up considerably. I don't know if I'm going to be continuing that. But what I call, welcome to the club stocks, because in the club, which we're not in, that's where all the money is. And if you had this stock and you owned it for a year, you'd be up about 500%, or as we said, 1,117%, which is acceptable. I found that if I tried to screen for 100% performance, the number of stocks that was returned just started to get ridiculous to manage. I mean, I don't want to try and look at 50 stocks every day just for this. If I wanted to double my money, pick one or two that might be doing a good job. Stream is HealthStream, Streamline Health Solutions. Chart is okay. Patrick, again, I like Patrick, not only because it's my name. Linktone, maybe not. Impact Mortgage Holdings, the MREIT space was attacked recently. FSII, looks like this is a buyout. I don't want anything to do with that. And Cybex, I don't know what the hell's going on with them. Why are they all of a sudden, that's just a, this is a good sign. Right here, this is a great sign for Cybex. But anyway, this is one of the reasons why you want to do due diligence all the time. Possible breaches of fiduciary duty by the board of Cybex International. Thank God this wasn't on my portfolio there. But anyway, let's go back to the screener. And how did we get this? This was 200% performance and the price above. So price action is telling you it's good. The chart is obscene. I don't know. It's really hard to figure out what things are going to do. But anyway, once I have a list, and I do have the list, I have club stock. I just came upon the idea to just screen based on performance with no dividend yield. I mean, and some performers that do show up in these screens. HCII was one that showed up at some point anyway. This actually pays a dividend. And what they've done is they've increased their quarterly dividend by 12.5%. Let's go Yahoo. To 22.5 cents per share from 20 cents per share. But they also declared a special dividend, I believe. Yes, that's a special dividend. And the special dividend, 10 cents per share. So they're both paid on December 21st. Shareholders of record November 16th. There's no special for the special. It's less than 25% of the value of the share. Not like Sycamore. The dividend is was more than 25% of the price of the stock at that time. It was probably around $14 or $15. Right? There's another one, Fisher. And they just, I believe they closed that offer on Friday. Here we go. $10 per share. October 22nd. Not be entitled. So that's the ex-dividend date, October 22nd. And if you had bought it Friday, which I think was the payment date, the payment date was probably October 19th. So if you had bought it yesterday on the payment date, you'd still special dividend. But that as a return of capital. Sycamore was next as a return as a dividend, actually. So now I have all the symbols that I could possibly want, and I've color-coded them in my spreadsheet. This is the old spreadsheet here. I have all the symbols, the buy-or-sell signals, which is actually a linear regression reversal, the color codes, the kick list, the recent list, the ex-dividend date. Glad has a new ex-dividend, but I'm not moving it until it's more than a week past, because I just like to be reminded. Then we have the plotting for the price channels, and then we have the visual representation, the price trend indicators. I think it helps me a little. As you can see, there's a couple that have been down that are now turning up. Down for the month, up for the 9 days. And with all of these high dividend stocks, they recently took a nice dive. AGNC is still trying to recover, and ARR may be trying to recover, and CYS, cover your stuff, perhaps is starting to recover. AGNC looks like it is starting to turn up from that downtrend. ARR, if you look at the channel, seems to be turning down, but the last 3 or 4 bars do indicate a little consolidation, and maybe a turn is in the works. And the other one was CYS. In CYS, we do see a downtrend in the 3-month and the 1 month, but that the 9-day is starting to turn up from that. And you can see that in the last 5 channels as well, the last 5 bars. But anyway, we got the buys and sells, the number of times kicked, the recent pass list. I like to stick with numbers that are fairly high on the recent list. 18 is a good number, 12, 14, 13, good numbers. You know, some of the other numbers have a low number here because they're new to the list because of changes I've made or changes in their situation. In the long term, though, I believe it'll all even out. IVI is a stock that has consistently performed and shown up on a number of lists. MCC as well. NRF, PMT, these are all stocks performing well. 2 recently got hit as well. And we can see it is turning up in the 1 month, but down in the 9-day. That seems to be some sort of fluctuation there. There is a buy signal on the regression reversal, and a fairly big green candle. Might call it bullish engulfing. A second bullish engulfing after a bearish engulfing and a bearish engulfing. So, you know, you can see trends. I like to pretend that the trend is my friend, and I will defend that view. Anyway, I hope this has helped. I hope I didn't ramble too much. I like to go through and see all the charts, and then I can get a visual representation of which ones are doing well. And I find that if they look good, they will be good. This chart here looks a little good, except for near the end. Lower right corner, you can see it hit a high of 23.59, then turned down. It's turned back up from that downturn, so maybe we just hit the bottom of the channel, and we're going to head up towards the top of the channel, because these stocks, they all seem to undulate. ARI, it's another real estate stock. I don't know if I have any of these. I think I have a few shares of this. This is broken down out of the channel, and I'm looking for it to turn back up now, though. ARR, it would be nice if it turned back up, but I think AG&C will. I don't know about ARR. BlackRock, it's another one. The spread is a little wide, upper left, as opposed to another stock that might have tighter channels. A tighter channel, to me, shows that the stock is a little more stable. I like stability. I don't like surprises, especially when they come in the form of, good morning, your portfolio is down 50%. I don't like that. That's not a good thing. You can't prevent it, but you can limit it. Stop losses aren't a way to do that either, because you have high frequency traders that continuously rig the system for their benefit. You can see that there was a huge volume spike on August 7th, and the price action was considerable, although it was a little unwarranted. The same thing recently on October 15th. Everything took a dive from around the I'm going to call it the 8th, right through the 15th, that whole week. It didn't look good. But we are turning back. And like I say, I like to go and I look for stocks that are in a nice, tight channel. This EFC Ellington Financial, it's a nice channel, but it's down for a month and down for 9 days. I'm not going to be putting money into something that's going down. FDUS, very new to the list. Looks good, but again, down in the most recent 2 periods. FSC, this was a long-time favorite. The spread on the channel upper left is a little wide, wider than I like. Full is a little narrower spread, and it is turning up. It's up in all the periods. That's a monthly pair, might be one to consider. Glad has some wild swings back around the beginning of the year. Not so sure I like that. It's okay when it goes up, but what happens when it comes down? IVR, Invesco, it's a nice tight channel. It shows fairly orderly play between each of the regions, above the middle line, below the midline, bouncing up to the upper extreme of the channel and bouncing down either to the midline or through the midline and down to the bottom of the channel or near the bottom of the channel and up. The trend is up in all periods. I kind of like that. I think you would too. KCAP Financial, a little bit of a too wide spread over the 6-month period, 9-month period for me. So I'm not real keen on that. KKR Financial, again, the spread's a little wide. I'm looking at MCC now, and the MCC is got a nice tight channel. It's turning up. It's looking pretty good. MCG Capital, spread's a little wide again. I don't like the wild swings. A recent high of 536, and right now it's 481. I'll wait on that one. MFA is nice tight channel, but it is down in the most recent couple of periods. So that's out of the consideration momentarily, at least. MIT, hate the name. It is starting to turn up again. This might be one that I would consider investing in again. Newcastle is a nice tight channel. Everything looks up. Again, it didn't for a while, but it does now. North Star Realty Finance, that's another one. It's a little wide, but I like the recent channels. Looking pretty good. PennyMac is got a nice looking channel. Everything is looking up. PSEC, Prospect Capital. Spread is a little wide. I like the ups and downs on this one a little less than I like the ups and downs on this one, but I might consider it. Rentec Nitrogen Partners, it's an MLP. You might want to consider it. It's down in the month period, but turned up from that in the recent 9-day period. So it looks like it might be rebounding. It also took a hit when, I believe it was Mosaic. I think that's it. MOS, they reported their earnings and they took a dive. Let's look at. Did they? Yeah. Yeah, they've taken a little bit of a dive. They're down in the 3 month, 1 month, and 9 day. The 9 day looks like it's turning around for them, and good for them. So here we are back to my list, and RNF Nitrogen Partners starting to turn up again. Ship Finance, a little bit of news on this recently. I think it was yesterday that there was some news on it, and we had a nice run up during the day, but ended up a little bit above what we opened. Let's see, we opened at 15.40, closed 15.59. The high of the day was almost $16, $15.98, and that was up from the previous day's close of 15.33. So 15.33, close at 15.59. That's nice for 2 days. That might be something I'd be looking into, but the spread is a little wide on the 1 year chart. Triangle Capital, I've invested in this before I started any of this high yield, high return dividend portfolio, and it's just it's a little new to the new screening method that I'm using, and I want to be careful. The chart does look nice. We are seeing a little bit of an undulation in the 1 month and 9 day period, but then again it looks pretty orderly. Orderly is good. THL Credit, a little bit wider channel, I think. Maybe it's about the same, but this is either flat or just, I have to look at this really close now. Yeah, well, it is turned up. It wasn't. THL Credit, I've already changed it. This 9 day period here was pointing down. It's now pointing up. Tick Capital, coming back from a 1 month decline. We'll see how it goes from there. Two Harbors is a nice looking chart. It is did take a hit recently. The 9 day period shows a downtrend. The 1 month period does show an uptrend. You can see a decline again starting, well, this one here started on the 9th. The 10th was a pretty big decline. And then again, high frequency trading. On the 15th, we hit a low of 1077. We opened at 1160 and ended up closing at 1146. And right now the close is at 1191. So I do believe we're going to see this 9 day channel start to reverse and turn up. But it hasn't yet, so I don't want to say that. But it was down considerably more, and also down in the 1 month period. So anyway, there you have it. I pick out the stocks that I like to see the channels and everything line up really well. IVR is a good one. I like that. MCC is a good one. I mean, they look good, you know. Newcastle, another good one. North Star Realty Finance. Yeah, I like it. I like it. PennyMac, love the name. Not a bad looking chart. I like the price action. Two Harbors, 200s is a nice tight chart. Orderly progression up to the top of the trend line, bounce off the top to midline or a little below, and then up again to the top of the trend line and a bounce down, except for the high frequency trading where it totally broke down the bottom of the channels, all of them. You know, the overall trend for this stock is going up. This is algorithms here at work. I don't want to get into that. That's a political type of thing. At any rate, there you have it. There's a few stocks for you. AG&C looking like it's starting to turn up again. ARR again needs to. It hasn't yet. I believe it may. CYS, it's starting to turn up. Hope that continues. Maybe we can correct this 3-month downturn. Because again, if I'm going to invest in a stock, I'm not putting money into a stock that's been down for the last 3 periods. 3-month, 1 month, 9-day. As a matter of fact, if it's down in just the 9-day period, I'm probably not going to put money in it. Because it will start to turn up. You know, if you're afraid you haven't caught it at the bottom, you know, no matter what price you buy it at, that's your bottom or your top. And you can either buy right or you can buy often or whatever. It's all, there's no sage advice that I can give you here. I just like to think that if a stock is in a trend and it's moving along in that trend, it will continue in that trend. And that's why I watch these channels. I made them narrower so that they would fit inside each other. If they were on an uptrend or a continued downtrend even, like for instance this IVR, you see that all the channels seem to fit inside one another. The exception being the 3-month here has pierced the 6-month, or would have, okay, and the 3-month channel, actually the 1-month channel and the 9-day channel, showing little undulations, but you know, that's a pretty stable motion, and it's all up, as opposed to something that's, you know, perhaps, I don't know, going down. You don't want to see motion like, that was good. There's Life Partners. They recently had some news. Something about a court case. They were being sued or investigated or some ridiculous thing, and then it came out that, you know, they were okay. They really didn't lie to you or something. But again, the trend, the overall trend is down. I don't want to get involved with that. You know, anything that's got a downtrend overall, you want to try and stay away from that. We could look at some of the club stocks and see how they fare in this. I find that these are mostly volatile. So again, looking at the club stocks now, and is Buyer Delivery Sciences. Good looking chart, but down in the most recent 2 periods. May have pierced a trend line. It's one of those, it's something that you'd want to watch and keep abreast of the news and do a lot of due diligence on if you're going to try and invest in any of these big winners. Cons, that's some sort of retail store, I think. First Financial. I just started following or watching these. Homeowner's Choice, again, they came out with a dividend increase and a special dividend of 10 cents per share. They're going to pay them concurrently. The extra dime is just to get rid of it before the so-called fiscal cliff. Harris Interactive, that's been on an uptrend. Looks like it might continue. Fonar Corporation, that's not pretty. Where are we? Impact Mortgage Holdings. A long time, looks like it did nothing, and then shot up in the past couple of months. Went from $1.93 back in July to almost $12 earlier this month. I don't know. It's too much. Linktone, NTS, Patrick. There's a nice orderly chart. It's fairly orderly at any rate. It's up 1,100 and something % for the year. Yeah. Pharmacyclics. Yeah, it's a fairly orderly chart. A little bit of piercing of the channel going on. Pulta Group. Looks like we're turning it up. Security National. Again, looks like we're turning it up. Santa Rus, whatever they call it. I was riding the bottom of the channel for a while there, and they had it was after their earnings and conference call. Did they beat? Probably not. They estimated 8 cents, they made 5 cents, so that's why it went down. And it kind of based there for a while before shooting up again. Now we're back along the track and on a continued uptrend. Good for them. And Streamline Health Solutions. Again, for a long time did nothing. And then probably, I don't know, 5-6 months ago, 4 or 5 months ago, whatever, there was an earnings call. Looks like it beat. 7% actual, no estimate. Lovely. They expected them to lose 3 cents in the most recent one. They actually lost 4. So they lost more than estimates, and then the stock went up. Right, that makes sense. Absolutely. Okay, well, I hope I gave you a little bit of insight. Hope I didn't ramble too much. I do that. I do want to wrap this up. And so I'd say thank you, good luck, happy